India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a better handover from Wall Street as we wake up this morning, slightly better. And there is a lot to talk about here. We're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning. And I want to just sort of right at the outset wish everyone a very happy Teachers' Day.
Absolutely.
To the early learnings, to the lessons still continuing. I think the market, of course, is the biggest teacher of them all. Teaches us something or the other every day. And this job, of course, I think I've always said it, is just quite incredible. The amount that you get to learn if you want to.
Absolutely. Good morning, guys, and good morning, viewers. Absolutely. And, Teachers' Day is one day when you look back and remember all of those individuals, those teachers who made that contribution. You probably didn't know it at the time, but in hindsight, you realize that's where the inspiration and the confidence and, so many of those dreams came from. And like you mentioned, Prashant, our profession itself, we've learned so much. Been very lucky to be working with some of the very best. Inspiring thought leaders, people who've kind of, told us to hold the torch high and keep asking those tough questions and keep seeking information and the right answers.
Well, that's right. Happy Teachers' Day to all those teachers out there who are professionals, and also the markets. They are the teacher that teaches you something new every day. You're as good as yesterday's session. And happy Teachers' Day to both of you guys as well. I think in terms of experience, I'm a little lower than both of you all. Learn a lot from you all, not just about markets, but about life as well and how you navigate things. So happy Teachers' Day and happy learning to all of us.
I can say that to you as well. I was just going to say, but you stole the last phrase. Learning's about life. We learn a lot from this guy.
There was also a slight poke at the age, our age.
I see now.
All right, let's take a quick look at what you need to know as far as market action is concerned, right? So equities last night were a little flat. They were sideways, nothing large in terms of a cut or anything of that sort. But it was down. S&P was down about 0.16. Nasdaq was down about 0.3 odd % or so. And that's the picture out there. Now, the big talking point, of course, was this entire AI semiconductor chip stocks, right? They were down once again. Nvidia, after the near 10% fall, was down another 1.6% last night. So that complex is looking a little weakish. You had yields which came off about 8 basis points. We are down to about 3.75%. You also had the dollar index, which is now down to about 101.27. So about 0.5%, nearly 0.5% cut there. You had some numbers, the JOLTS data, which basically shows job openings in the U.S. economy. And for July, the number that we got, there was unexpectedly fell sharply. And but without going into the numbers, it's the lowest level since early 2021. This is, of course, one data point. The big one, of course, is going to be tomorrow when we get the monthly NFP, which is the non-farm payrolls report. Remember, in early August, that is the one which triggered, along with other things, the yen, etc. But that is that Friday data point, end of July, that really triggered this market mini crash early August or so. So I think tomorrow is important in that sense. Just two other things. You got the USD JPY, which has now come up to 143 levels. It's essentially 2 weeks back, we were in we were talking about the USD JPY in the 147 handle. We are back at 143. The early August, that we were at about 162. And then there was a rally all the way to 142. And that's essentially what caused a fair bit of fear in the market. We're back at about 143. So the yen basically has rallied against the dollar and rallied hard once again. Oil prices, we're at about 72. Lots of noisy OPEC headlines. We can talk more about this. As I said, the jobs number tomorrow has got the potential to move markets. Whether it'll do or not, I think is the question. A 25 basis point cut in September when the Fed meets, I think is largely in the price. Can it be 50 is the only question. I've said this before, I'll say it again. Markets would like 25, not 50. 50 will sort of smack of some fear and markets will wonder whether the economy is deteriorating faster. 25 is like a gentle glide path, which I think the markets will live with. Even and they'll say, well, it's Goldilocks and economy is strong and you're getting rate cuts, so well, what's to worry? But 50, I mean, throws those equations a little unbalanced there. Now, just to circle back to the levels here, I mean, I think on the Nifty, the near-term support is yesterday's low, because we had a nice, clean 100-point bounce. So 25,083 is yesterday's low. That number should be the first line of support. And on the upside, I mean, targets are the same. The swing high, which we took out, 25,333 is the swing high now, and 25,530, which is the retracement, extension retracement of the earlier move. So that's the Nifty. On the Bank Nifty, yesterday it held an important support of 51,240, so that becomes sort of something to watch out for. The 20-day comes in below that at 50,789. I'm talking about the Nifty Bank, if you can move the graphics along. Support 51,240, and then the 20-day at 57.89. And on the upside, targets are essentially 51,750 and then 51,945. These are very near-term key resistance levels which the Nifty Bank needs to take out. Gift Nifty will come up on your screen, giving you a sense of how the start is going to be. It's a nice 100-point higher start this morning. Surabhi.
Yes, absolutely. I mean, I think playing for a bounce, that's what bulls will go with, at least as we start off, because Asia seems to be a bit on the recovery path, though Nikkei is not quite playing ball. There's still some red on that screen, and the Hang Seng is flat, flip-flopping between red and, red and green. Just a word on oil, because Prashant mentioned this. Let's bring up oil prices. Yesterday, by the way, WTI fell below $70 a barrel. 69 is the last print. Just around that level even now. And Brent is tracking 73. Now, these are 9-month lows on oil prices, which has been working well for some of our stocks like paints, tires, etc. The talk is that OPEC Plus might now delay the increase in output that it was originally planning in October, looking at this reaction in the oil market, and that Libyan issue has resolved itself. So I don't think we are getting an outage from Libya. Because of all of that, this fear of excess supply, low demand, we are seeing 9-month lows on oil prices. But anyway, to get back to this whole point of whether we'll get the 50 basis points rate cut or a 25 basis points rate cut. Yesterday, we had commentary from one of the Fed officials. This is the Atlanta Federal Reserve President, Raphael Bostic. He says we cannot wait until inflation has actually fallen to 2% before removing restrictions, because that would risk the labor market disruption that could inflict unnecessary pain and suffering. So basically, raising expectations that we might get that bigger number. The odds now, if you go by the CME Fed Watch, the odds of the 50 basis points rate cut now stand at 45%. This number was much lesser, around 30% till about a week back or so. So let's see how this plays out. Remains a very key watch point. And the jobs data on Friday will give us a lot more clarity on which way the Fed could perhaps swing. Back home, let's talk about the flows. Now, we've got FIIs buying to the extent of about 975 odd crores. DIIs were net buys. The net number on the DII side was a little lower, but there are so many block trades happening that are skewing the data on a daily basis. So I went back and checked the final numbers, not the exchange numbers, but the depository numbers. And they tell you a picture, something that a lot of our guests have been pointing out. FIIs are coming in the market. It's not like they're not, but they're coming in via these block trades. They're looking at these strategic, buy-ins, because the numbers have been all positive. May was the last negative number. June, July, August, September, all positive. July's buy was about 32,300 crores. In September so far, just 2-3 days, because of the kind of blocks we're seeing, the positive FII number is already in excess of 10,000 crores. That's just the nature of the action in the market. Quickly coming to some stock-specific action worth watching out for today. Reliance, remember, today is the board meeting to discuss that 1:1 bonus. So we'll see how that plays along. There's a buyback that is being considered by Matrimony's board. Remember, the stock zoomed almost 10% when that news came in. So today is the board meeting. And finally, we will get a new entity from the House of Raymond, the lifestyle business, the branded apparel business that lists out today. I was trying to look at the numbers that are doing the rounds. And one of the reports, this is Antique, said that the fair value of this business, if you go by FY27 numbers, should be around 180. And then, of course, it depends on how charitable the market is feeling and what kind of a number we actually get on the listing. But enough to keep us busy. Global cues, lots of local stock developments as well.
Well, that's right. And today, in fact, global cues are far more stable than what we woke up to yesterday. Yeah. And if you look at yesterday's trading session, it was a beautiful one because the dips got bought into and the Nifty cut its losses by half by the time we wound up. So a big recovery is what we saw from the low point of the day. If someone told you, at the start of the trading session that you'll end low by less than 100 points and you'll have institutions that were net buyers, well, the bulls would have grabbed it with both hands. So India continues to outperform, and that's a positive because these dips are getting bought into. What about positioning in the index futures? We have two big participants out there. The clients, well, they cut some of their short positionings in yesterday's trading session. So there was a bit of short covering that we saw in trade from the clients, which is good news. That's telling you that they're, maybe not expecting a sharp decline from here on, and they are the ones that have got it right. So that was about the clients. And on the FI side, well, there was some unwinding of long positions is what we saw in yesterday's trade. Moving to the PCR, well, that was at around 1.45 a few sessions ago. That's come down to more palatable levels of around 1.1 odd. How did that take place? Because we've seen call writing that came back. And now these call writers, going by the opening, they'll be getting a little bit nervous today. 25,200 call, 25,300 call, massive open interest built up out there. And these call writers, going by the bounce that we're seeing, we'll have to keep an eye on both these two. Will there be some unwinding seen at both these two strikes, which will tell you the bears are getting nervous now. They thought that they could protect the higher levels. So we'll have to see some follow-through buying post the start. Which brings us to the levels. Going by the options data, and today is the weekly expiry, so these contracts will expire. You have the crucial resistance zone at around 25,320. That's around 120 points away from where we ended yesterday. So that's the important mark. We need to get past that to sustain a bigger bounce. Yesterday's low becomes a reference point in the near term, so that could be, the support level. And, the bigger support comes in at around the 24,700, which most technical analysts don't expect to break. So those are the levels on the Nifty. The Nifty Bank, that recovered yesterday from 51,250, which is the level we pointed out yesterday morning. But it needs to get a little bit higher, from past that 50 DMA, which is around 180 points away from where it closed up yesterday. So you wanted to get past that, then it's well and truly on its way to around 52,000 odd. Looking at the stocks in focus, yesterday we had some of these cement stocks that came off the low point of the day. Some of the input costs are cooling off as well. And after a while, we're seeing that, cement prices, some of those price increases are sustaining. So the stock I'm looking at is Ramco Cements because it's got past the 20, 50 and the 100 DMAs. The 200 DMA, which is around 30 rupees away. So I'll keep an eye out on this one. Quality name from South India, lot of headwinds. But if this price hike sustains, then maybe that's a stock that we should be focusing on.
Nigel, thanks very much for that. So keep an eye out on cement, right? By the way, here in Mumbai, it's raining. End of the monsoon season, it's raining harder now, I think, compared to the last 2 weeks. But good news, I was reading that the lakes which supply water to Mumbai are 97-98% full. And the fact that monsoons have extended so late, which means that, you're not looking at water cuts, etc. early on, like we've seen.
April, it was a bit of a late onset as well, I think. So the expectation was that maybe we'll have a bit of an extended period.
Ganpati, right? So normally,
it does rain around Ganpati time.
And I think that usually sort of marks the end as well.